If you are filing your taxes in early 2026, there is one thing you absolutely cannot afford to overlook: federal tax credits. Not deductions, not loopholes, not accounting tricks, real tax credits that reduce your tax bill dollar for dollar, and in many cases can actually put money back in your pocket. Every year, millions of taxpayers leave hundreds or even thousands of dollars unclaimed simply because they don't fully understand how these credits work, how the rules change from year to year, or how inflation adjustments quietly reshape the numbers. The 2025 tax year, filed in 2026, is no exception. In fact, it is one of the most important filing seasons in recent years when it comes to credits. Right now, before you file, is the moment when understanding these changes can make a measurable difference. Some credits are larger, some eligibility thresholds have shifted, some refund rules have changed. And if you wait until the last minute or rely on outdated assumptions from previous years, you risk missing benefits you are legally entitled to. That is exactly why this video exists: to give you a clear, structured understanding of the most important IRS tax credits affecting your 2025 return, without confusion and without hype. Federal tax credits work differently from deductions, and that difference matters more than most people realize. A deduction reduces your taxable income, which only indirectly lowers your tax bill. A credit, on the other hand, reduces the tax you owe dollar for dollar. If you owe $2,000 in taxes and qualify for a $2,000 credit, your tax bill becomes zero. And if the credit is refundable, you may still receive money back even if you owe nothing at all. That is why credits play such a powerful role in refund outcomes, especially for families, workers, and households with moderate incomes. For the 2025 tax year, several core credits stand out. The child tax credit remains one of the most impactful tools for families with children. Inflation adjustments have pushed the maximum credit higher than in prior years, and the refundable portion continues to provide real cash support to eligible households. At the same time, income phase-outs still apply, and understanding where those thresholds begin and how they reduce the credit is essential for accurate planning. The Earned Income Tax Credit is another cornerstone of the system. It is designed to support workers, particularly those with low to moderate earnings, and it is fully refundable. For 2025, the maximum EITC amounts are higher than many people expect, especially for families with multiple qualifying children. But the rules are strict. Income limits, investment income caps, and relationship tests all matter. A small error can delay a refund for months or even trigger an IRS review. Health insurance costs also remain a major factor for many households. The premium tax credit, tied to marketplace coverage, continues to help offset monthly insurance premiums. But reconciliation rules, advance payments, and recent IRS policy changes mean that what happens on your tax return may look different than in previous years. Understanding these mechanics before you file can prevent unpleasant surprises and unexpected balances due. Beyond these major credits, there are others that can quietly add up. Education credits like the American Opportunity Tax Credit, credits for adoption expenses, and credits for dependents who do not qualify under the standard child tax credit all play a role in the final outcome of a return. None of these credits operate in isolation. They interact with filing status, income levels, and even the choice between the standard deduction and itemizing. Another critical issue that many taxpayers overlook is timing. Refunds that include refundable credits, such as the child tax credit or earned income tax credit, are legally delayed until at least mid-February, even if you file early and everything is correct. This is not an IRS mistake or backlog. It is written into the law. Knowing this in advance helps set realistic expectations and prevents unnecessary stress. The goal here is not to overwhelm you with numbers, but to give you clarity. Once you understand which credits apply to you, how refundability works, and where the key thresholds lie, your tax filing becomes less intimidating and far more strategic. This video will walk through the most important credits step by step, explain what changed for the 2025 tax year filed in 2026, and highlight the practical points that matter when you prepare your return. By the end, you should have a solid framework for understanding your potential tax credits, spotting red flags, and asking the right questions. Whether you prepare your return yourself or work with a tax professional, This is about control, accuracy, and making sure your tax return reflects every benefit the law allows you to claim. Let's talk taxes. Specifically, we're diving into the key federal tax credits you need to have on your radar for the 2025 tax year. Now remember, that's the return you'll actually be filing in 2026. Getting a handle on this stuff now can make a world of difference when tax time rolls around. So what's our game plan for today? We're going to start with the absolute basics, what credits even are. Then we'll hit the big ones for families and workers. After that, we'll touch on a few others for things like health and adoption. And finally, we'll talk strategy, how to file smart and wrap it all up with a handy little checklist. All right, first things first. Before we start throwing around a bunch of numbers, we really have to get a solid grasp on what a tax credit is. Because honestly, this is where your biggest savings are. Okay, this is probably the most important thing to get right off the bat. A tax credit is like a superpowered coupon for your tax bill. A $1,000 credit, boom, you owe $1,000 less. It's a direct dollar-for-dollar reduction. A deduction, on the other hand, just shrinks the amount of your income that gets taxed. So yeah, credits are way more powerful. And it gets even better. See, there are two main flavors of credits. A non-refundable credit is great. It can wipe out your tax bill all the way down to zero, but that's where it stops. A refundable credit, though, that's the holy grail. It can wipe out your tax bill, and if there's any credit left over, the IRS sends it to you as a refund. Yes, you can get money back even if you didn't owe any taxes to begin with. All right, now that we've got the basics down, let's look at the big kahunas. We're going to start with the two credits that affect millions and millions of taxpayers, the child tax credit and the earned income tax credit. First up, the child tax credit, usually just called the CTC. For families with kids, this is a huge deal. So for tax year 2025, we're looking at a maximum of $2,200 per qualifying kid. And this number isn't just pulled out of a hat, it actually gets adjusted for inflation, which is really important when you think about how much the cost of raising a family is going up. But this is a big but, it's not quite that simple. There are rules, of course. Your child has to be under 17 at the end of the year, you have to claim them as a dependent, all that stuff. And the big one to watch is your income. The credit starts to shrink or phase out once your income hits a certain level. So you really got to keep an eye on that. And remember what we just said about refundable credits. This is where it really matters. Of that $2,200, up to $1,100 of it is refundable. That's the part that can come back to you as cash in your pocket. You do need to have some earned income, at least $2,500, to get this part, which is officially called the additional child tax credit. Okay, next up is the Earned Income Tax Credit, or EITC. Now, this one is specifically aimed at helping out working people and families who are in that low to moderate income bracket. Just look at these numbers for a second. The difference is staggering, right? For a worker with no kids, it's about $650, but for a family with 3 or more kids, it can be over $8,000. This is a fully refundable credit, and for millions of families, it's not just a tax break, it's a critical financial lifeline. Okay, so beyond those two giants, the tax code has a bunch of other credits that are designed for very specific situations. Let's run through a few of the most important ones. If you get your health insurance through the health insurance marketplace, you absolutely need to know about the premium tax credit. It's what helps make those monthly premiums more affordable. And just a quick heads up, there's a rule change coming, but it doesn't kick in until after the 2025 tax year. So for this return, the current rules still apply. For any families out there who are adopting, this credit is huge. It's non-refundable, but it can help you cover a massive chunk of those really high costs like court fees and travel up to over $17,000. And hey, don't sleep on these other credits either. You've got one for higher education expenses, one to help with daycare costs so you can work, and even a smaller credit for dependents who might be too old for the child tax credit. It's always worth checking the fine print to see if you qualify. Okay, so knowing about these credits is one thing, but how do you actually make sure you get them? Well, that's all about having a smart strategy and planning ahead. It really comes down to 3 key things you should be thinking about during the year, not just scrambling in April. First, know your filing status. It makes a huge difference. Second, keep an eye on your income so you don't accidentally phase yourself out of a credit. And third, for goodness sakes, keep your paperwork organized. Look, nobody wants to get a letter from the IRS, right? Well, these are the common tripwires you really want to avoid. A simple typo on a social security number can hold up your refund for months. Forgetting to reconcile those health insurance payments is another big one. Just double-checking this stuff before you file can save you a world of headaches. Okay? Listen up, because this is a really important heads up on timing. By law, if you claim the child tax credit or the earned income tax credit, the IRS cannot, I repeat, cannot issue your refund before mid-February. It's an anti-fraud measure. So if you're counting on that money early, you need to adjust your financial plans. Okay, that was a lot of info. So let's boil it all down to the essentials. Here's a quick and dirty checklist of the key things to remember for your 2025 return. So here it is, your cheat sheet for tax year 2025. You've got your max amounts for the CTC, the EITC, and the adoption credit. And the most important takeaway of all, planning is everything. Your income, your filing status, these are the keys that unlock all of these powerful savings. So at the end of the day, it's not just about what the IRS says you can claim. The real question is, are you prepared to claim every single dollar you've got coming to you? Knowing what's out there is step one. Now it's time to put that knowledge to work for your own situation. When it comes to tax filing, the difference between a routine return and a truly optimized one often comes down to how well tax credits are understood and applied. By the time you reach the end of this overview, one thing should be clear. Federal tax credits are not side details of the tax system. They are central tools that shape how much you owe, how much you get back, and how predictable your financial outcome will be when you file. For the 2025 tax year, filed in 2026, the landscape of credits reflects several important trends. Inflation adjustments have pushed maximum credit amounts higher. Refundable credits continue to play a critical role in supporting families and workers. And IRS administrative rules, particularly around refund timing and reconciliation, have become more important than ever for managing expectations. The child tax credit remains a cornerstone for households with qualifying children. Its partial refundability means it can provide real cash benefits, not just a reduction in taxes owed. But it also comes with income phase-outs and documentation requirements that must be handled carefully. Knowing where you stand relative to those thresholds can make the difference between receiving the full credit and seeing it reduced. The Earned Income Tax Credit continues to be one of the most powerful refundable credits in the system. For eligible workers, it can represent thousands of dollars, but it is also one of the most scrutinized credits by the IRS. Accurate income reporting, correct dependent information, and attention to eligibility rules are essential to avoid delays or audits. The Premium Tax Credit highlights how credits are not just about tax refunds, but also about ongoing financial stability. Changes to repayment rules and reconciliation requirements reflect an effort to reduce uncertainty for taxpayers using marketplace coverage. Still, these credits must be handled correctly on the return to avoid unexpected balances. Other credits, such as education, adoption, and dependent-related credits, often receive less attention, but can significantly affect the final outcome of a return. Overlooking them or misunderstanding their limits can result in missed opportunities for savings. One of the most practical takeaways is the importance of planning. Filing status, income timing, and awareness of phase-outs all matter. Credits interact with each other and with deductions, meaning that a decision in one area can influence eligibility in another. This is why a clear, holistic understanding of credits is more valuable than focusing on any single number in isolation. Timing also matters. Refund delays tied to refundable credits are not a sign of error, but a legal requirement. Knowing this helps you plan cash flow realistically and avoid unnecessary concern when refunds do not arrive immediately. Ultimately, the goal is not to turn every taxpayer into a tax expert, but to provide enough clarity to make informed decisions. Whether you prepare your own return or work with a professional, understanding how these credits function allows you to ask better questions, verify the accuracy of your return, and avoid common mistakes. As you move toward filing your 2025 return, keep this framework in mind. Review your eligibility carefully. Use updated IRS forms and instructions. Double-check dependent information and income figures. And remember that tax credits are not automatic. They must be claimed correctly to deliver their full benefit. A well-prepared return is not just about compliance. It is about ensuring that your filing reflects every legitimate benefit available under the law. With a solid understanding of how IRS tax credits are changing in 2026, you are in a stronger position to file confidently and accurately.
Hello there. Are you currently navigating the complexities of retirement, or perhaps rapidly approaching that significant life milestone? The Retiree's Handbook is your dedicated YouTube guide for all retirement and pension news right here in the United States. It's crucial to stay informed about your financial future. We cover understanding pension benefits and maximizing your Social Security, ensuring you have the knowledge you need. Our channel provides actionable financial tips for retirees, helping you confidently make the most of your golden years. Don't miss vital information that impacts your peace of mind. Join our growing community today. Thank you for watching. Your financial security and retirement is incredibly important, and we're here to help you every step. Please subscribe to the Retiree's Handbook channel to never miss our latest updates and valuable insights. Join our community for continuous support, future pension news, and helpful resources to empower your retirement journey.